Elon Musk just spoke wide open about Nio stock. This is when Nio stock will hit $100. What did Elon Musk just speak wide open about Nio stock? When will Nio stock hit $100? And what is the future of Nio stock? Welcome to Stock Market News. We are back with another interesting video. Today, we are going to talk about when Nio stock will hit $100 and why Nio might surpass Tesla. So without any further ado, let's get into the video right away. Due to Chinese regulatory constraints and threats of delisting, Nio stock price has fallen during the past few months. For the first time in a long time, the Nio stock price is on the rise. Since China introduced its zero-COVID policy, China's economy has suffered greatly. Many factories have closed as a result of the policy's tightening. In the meantime, China has been offering incentives it, according to economy and electric vehicles, as a way to jumpstart it, according to rumors that the Chinese government is considering removing restrictions. The government is pushing people to switch from gasoline-powered automobiles to electric ones by releasing new, more affordable versions soon. For companies like Nio, which has a significant stake in China's electric vehicle industry, the Chinese government is offering a grant of $1,500 to encourage people to switch from gas-powered cars to electric cars in the hopes that this will reduce greenhouse gas emissions and save everyone a significant amount of money. Tesla, Tencent Holdings, OTC Markets, and SIHI, two of China's largest publicly traded corporations, have already made significant investments in China's burgeoning EV sector. Nio, on the other hand, is one of the few companies in the EV market that is both appealing and advanced. This year will be a wonderful one for Nio, a Chinese producer of electric vehicles formed in 2014, which has already made significant inroads into the industry and plans for the future. Why you should buy Nio stock. According to the International Energy Agency, or IEA, China had the most EV sales in 2021, with a total that was more than double what it was the year before. However, there are still a lot of unknowns in the industry, such as battery supply chains and EV production capacity. If you want to strengthen your portfolio, you should look for companies that have been doing poorly in recent months and then check how well they have done in every other way. In early May, the Securities and Exchange Commission released on May 16th a Bank of America analyst named Ming-Soon Lee, who gave the stock a buy rating because the bad news was already priced in. Nio's electric SUVs are becoming more popular, and the company will add 3 new models in 2022. The company has leveraged its NT 2.0 platform to ensure that these cars will fulfill the needs of a wide range of individuals, and Nio has gone from selling only EVs in China to growing abroad. Currently, they are only available in Norway, but the company plans to expand to 25 countries by 2025. Don't listen to the Nio stock market's bearish sentiment. China has become the world's largest EV market thanks to the country's transition to electric vehicles. China, firms like Nio, which produces EVs and creates mobility solutions for big cities, have benefited from the emergence of electric vehicles. On the other hand, Nio has suffered recently owing to the wider market, but the company plans to rapidly boost revenues. Last year was a successful one for Nio, but its stock is struggling this year, defying negative sentiment and opening up new pathways of growth and prosperity. Nio stock has fallen 41% this year because of external economic causes and production challenges. Nio shares have so far gained this week on reports that Toyota and other manufacturers in China have begun to progressively resume production following short-term shutdowns. After a 3-week break, Tesla Shanghai began production on Monday. It's a breath of fresh air for Nio and other Chinese EV businesses who have been unable to meet production timelines owing to the COVID-19 related leaks and other circumstances. Nio shares fell a few weeks ago when the company was forced to halt production because of COVID-19 related rules. It has been over a year since Nio stock price has fallen, and the company has experienced intense competition in the car market. Tesla, Volkswagen, Li Auto, and Xpeng are just some of the companies that compete with Nio and want to take some of their market shares. Because of the semiconductor chip shortfall, Nio had to reduce its delivery predictions last year. Chip shortages are expected to endure until 2022. However, JP Morgan's analyst told CNBC that, despite high demand, semiconductor output will continue to suffer this year thanks to technological breakthroughs and rising supply. Despite the lack of specifics, JP Morgan expects things to start looking up by the middle of the year. As a result, NIO's performance isn't outstanding compared to other Chinese electric vehicle manufacturers, which has a negative impact on investor sentiment. Companies that make EVs saw a significant decline in stock prices, making them attractive and less expensive investments for investors. However, it is critical to select properly in this area, as a bad investment might result in enormous losses. A good example is Workhorse, a company that produces electric pickup trucks made in the United States of America. The corporation is still suffering from the loss of a $6 billion contract with the United States Postal Service. NIO, on the other hand, has a number of advantages that make it a smart long-term investment, including the fact that 3 new models will be released this year based on its NIO 2.0 technology platform, increasing its total number of releases to 6. As production ramps up in China, gross margins have risen in NIO's most recent years as the company delivered 91,429 vehicles in 2021, a significant rise of 109.1% over the year before. The stock is expected to rebound before the end of the year based on current trends. Recently, Ming Soon Lee of the Bank of America upgraded NIO stock to a buy rating from a neutral rating. In the second half of 2022, Lee believes that NIO sales and profit margins will begin to improve, and he has a price target of 26. This would mean that the stock could go up by 77% from where it is now. Given the depth of the current market, this upswing might occur within the next few quarters. The Wall Street experts are overwhelmingly bullish on the company's stock despite all the mounting obstacles. Buy rating and price target of $60 per share have been maintained by Vijay Rakesh of Mizuho on Monday. The ET7 smart electric car, the company's flagship model, began shipping to customers in March, marking the start of NIO's 4th model line. However, just 163 ET7s were sold in March. In April, there were 693 sales, and in May, there were 1,707 sales. This year, it intends to produce more models. Both the ES7 and the ET5 will be available by the end of the year. The ET5, a midsize electric vehicle, will be manufactured at the company's new plant in Hefei's NIO Park. The ET5 should begin rolling off the assembly line in September. ES8, ES6, and EC6 SUVs will also be updated with the new digital cockpit technology. Also, keep a close eye on the edges. Prices have risen across the board as a result of issues with the auto industry supply chain. The markets are confident that things will improve in the second half and get the company back on track, but the situation in China and supply challenges throughout the world are likely to be the major concerns in the coming months. As a result, NIO may prove to be a worthwhile recovery investment in the future. The company doesn't expect to make its first profit until 2024, however. New models, expansion into Europe, and increased R&D expenditures are all contributing to the company's rapid growth. Investors wanted NIO to grow quicker since the EV industry is so competitive. Things are looking better than ever for the company. NIO's stock price decline is a terrific opportunity for investors to enter into the electric car business, in my opinion. In addition, NIO plans to begin producing its own battery packs for this mass-market electric vehicle in 2024. For NIO to be self-sufficient and mass-produce low-cost EVs, the company will need to manufacture its own batteries. On Friday, NIO announced plans to develop an industrial base where electric vehicle parts will be manufactured. As a result of this, the company's production facility and component supply chain is now more conveniently located. So, this was all about this video. I hope you liked the information given in our video, and if you have anything on your mind, feel free to comment below. Don't forget to like, share, and subscribe to get more videos like this, and hit that bell icon to get the notification of the latest updates on the channel. And thanks for watching!